Welcome to Pioneers in Payments, where payments experts share their insights. Now, here's our host, Donna Blum.
Hello, everyone, and welcome to this edition of Pioneers in Payments. Today, I have the pleasure of speaking with Joyce Mehlman from the iLEX Consulting Group. Welcome, Joyce.
Hi, how are you?
I'm doing good. I'm so grateful that you're joining us here today, and we're looking forward to just gleaning some words of wisdom from you. So, to get us started, Joyce, would you mind sharing a little bit with our audience about who you are, your background in the payments industry, and then also about iLEX?
Sure. So I'm gonna try to keep it short. I obviously been around for a while. I'm not a baby on this street right now. But I started out of college as a teller, and I have basically worked for almost every big bank out there, every division except mortgages, which was by choice. It's been in banking over 43 years at this point of my life. I've worked for, the B of A's and the Chases and the Allies and Wells Fargo, Wachovia. I've done mergers, acquisitions, finance, project management, international, corporate, retail. I've kind of done it all, deposit operations. But what's really intriguing is in 2005, I was hired as a COO of Bancorp Bank and I spent 5.5 years with them, leading their operations, customer service, ACH and wires, risk and fraud, mailroom, and parts of compliance teams for them. Um, Learned everything I know about fintechs today from working there. It's kind of where I say I grew up. And we launched, we were the first bank to do it. We kind of coined the term fintech, and we launched the very first fintech ever, which was Perk Street, and also launch programs like Simple and Hire One. When I left Bancorp, I knew I wanted to stay in the space. I didn't want to go back to the big corporates anymore. I started at iLEX, started working with Brett King to help him launch Move In, which is now international. And then it just kind of went from there. And, it was hard getting started because fintechs weren't a thing back then, and investment money wasn't really on the road. But did some day jobs to support my night work, and luckily in like 2015 I got my first real client. It was a B2B that I'm actually still with today, and it just kind of went from there. And my team went from being, fast forward from 2015 to now, it's no longer just me. My team has 21 people on it, and we've launched over 45 programs, and we've helped launch over 10 to 12 banks and get them into the space as well, or assisted them once they were in the space to make sure that they had all the oversight they needed. So it's been a really cool journey. I've kind of seen it all in the banking industry. I just kind of keep going through the years and learning as each year changes.
Wow. You have an incredible amount of experience. Wish
Been
I
around,
had your resume.
been around a long time.
Well, that's awesome. Well, there's obviously a lot happening in the industry today, and that's one of the reasons why we're doing this podcast series is just kind of to distill everything that's happening and sort of make some sense of it for payments professionals. So if you had to name from your perspective, what the top trend is in the industry, what would that be?
So, I'm going to speak to the fintech industry, right? Because that's where I live and breathe. And, I think the trend right now was consumer. I think B2B is getting much bigger now, business to business. It was credit. Interest rates started going up, credit started going back down again. So we're kind of going back to that debit model again. Although there's some really cool lending opportunities out there as well. We're seeing a lot of cross-border today. So cross-border payments, international, working with the different communities. So I'm on committees for LATAM. I'm working with a program that's in Bermuda. We're working with people in Mexico and El Salvador who are trying to bring programs either to the US or back to those consumers within those countries. Money movement in general is becoming a huge trend right now. And how do you make it simpler? And how do you get people to be able to move money within families across borders without using, and they serve their purpose, but without using the Western unions of the world who are charging you $25, $30, $40 a transaction.
Right. Yeah,
So
that's true. Um, Certainly, with so many payments options out there and having different cost, for each of the different payments, people are looking for lower cost solutions for transacting.
absolutely.
So, Let's talk about what you see is the top opportunity for organizations that process payments today.
So, the banks, there's two organizations that really stick out in this space. You have the banks and you have the processors. Everybody else are supplemental vendors that you need, like your KYC, KYB vendors, but the processor and the bank are really the core of what you need to do. We almost call it like the Holy Trinity. It's the program, the bank, and the processor, and they start this, this triangle. For the banks, I think the biggest opportunity out there is really still getting into the space like they have been for the last, I don't know how many years, but it's not slowing down. We get calls from banks every day looking to see how can they get into the space. Does it make sense? What would they need to do? What would their overhead look like? Right. So that opportunity just to be in this space and be able to support fintechs is still going strong. I mean, it's become very clear to the big banks, to the regulators, to the agencies, fintechs aren't going away, and we either need to learn how to work with them or we need to work against them. And I think we've finally got to the point where people aren't working against them as much anymore, and they're learning how to partner with them. And that's what banks in this space are all about, right? And I'm even seeing banks that are over the $10 billion mark where, interchange becomes an issue, finding creative ways to get into that space on the credit side where they can use their balance sheet and give back interest earned on deposits, or, funds flows where they're more applicable to a lending product or a credit product where they can't give interchange but still make it worthwhile for a fintech to work with them. So, for a bank, I think that's the biggest opportunity. For the processors, I think being modern in your software is the big thing. There are a lot of processes out there. There are a lot that have been out there for a very long time and are tried and true, and they've been doing this and are kind of like, we used to be called the grandparents of the space at Bancorp. They're the grandparents of the space in the processing world. But fintechs are getting smarter, and like you're right, they want everything quicker and faster and cheaper. And a lot of the processors are out there today just don't have the ability to do that as well because they haven't upgraded their software and their ability to do that through APIs and different tools that those fintechs use. So it's really important for anybody in the processing space looking to get in is to make sure that you're agile as well, that it is a very compartmentized type of implementation. I can pick and choose. I don't have to take everything. I don't have to use your full suite. I can use what I need and then take away what I don't need.
Yeah, that's excellent advice. Certainly the area where we fit into with our back office solutions to help
Yep.
modernize the back office. Okay, so that's the greatest opportunity. What would you say today is the greatest challenge for these organizations?
So I'm going to go the opposite way now. For processors, the biggest challenge is pricing. There are a lot of processors coming out, younger, newer. You have a lot that are true direct processors. So you're working directly with them, like the Galileos and the I2Cs and Lithics and E6. But then you also have BaaS models, which are more like Treasury Prime and Centera, right, and Unit, right? And so pricing becomes a big issue. And, fintechs are living off investment money. For every dollar they spend, they may not be getting it back again, right? So it's really important for them to make sure that they have the best pricing possible. And again, agility, speed to market, all those come in because they all impact their bottom line. For a bank, I think the biggest challenge is keeping up with the regulators. It keeps changing. And we've just been through a few audits this year, and it looks like, last year, I think we were keying in on BSA and third party management oversight, but, it was a little not as hard, and they weren't looking at liquidity on your balance sheet as much, and they weren't looking at your capital ratios, and also how much was that fintech taking up of your balance sheet, what happens if they left, what is your income stream coming from, do you have contingency plans? But unfortunately, because of the issues that happened with SVB and Signature Bank, and it's all become more apparent to the regulators, and they don't want to take the chance of more failures because it doesn't look good for anybody. And so it's really important for the banks these days to really understand not only what their fintechs are doing and how they're doing it, but they have the right oversight, more than ever that they have the right oversight, and that they also understand their own balance sheet. It's not just a matter of bringing on that fintech and making sure they're doing the right things and they're doing them properly. How are they impacting your bank overall? Are they eating up too much of your balance sheet? Are they changing your liquidity rates to the point that you can't support that anymore? If you have one big program and it's taking up the bulk of your balance sheet, What happens if they leave? What happens if they get sold? What happens if they go under? What does that do to your capital investment? What does that do to your income stream? Right? Because it's another way for a regulator to see not only the safety and soundness of the fintech, but the financial stability of the bank that's supporting them. So that has become really apparent. And third party oversight this year is just critical. It's now fourth party oversight because we now have, BaaS models in the middle that then go to banks that then go out behind there. You have vendors who are using vendors who are using vendors. There's so many white labels out there. The ecosystem just keeps growing. It's a spider web that just doesn't end.
Right. Just continues to get more and more complex. That's for
Yes.
sure. Okay. So this is my favorite question. If you were to kind of summarize, everything that's happening in the industry and take all of your sum total of knowledge, what is your like silver bullet piece of advice for these organizations that process payments?
So this hasn't changed for me since I've started working in the fintech space. It's what I tell everybody all the time. Working with a fintech is like entering into a marriage. It is really messy to try to get a divorce. It is costly, it is messy, it is painful. People will hate each other by the time it's over. You really want to make sure you pick your partners wisely, that you know the fintech that you're working with and what they are doing, and that you're comfortable with them and their founders and their model and their roadmap and their financials. And the same for the fintech. It's really important that they understand the bank that they're working with, what that bank is willing to support and not support. Do they have a seat at the table with that bank to make sure that they have the ability to have those discussions about some of the things they may want to do that's a little out of the box, to see if they can come up with a compromise or that an approval to do it. Nothing that's going to break the law or the rules, but it may just be a different way of looking at things. And that's why we like fintechs, because they do want to shake things up. They are, the old term disruptive, but they are really trying to modernize the banking industry. And the banks that work with them need to understand that and will allow them to have a seat at the table to work with them and understand what they're trying to do and why, so that they can figure out how they can make that work with them. If you're working with a bank that is, it's this way or no way as a fintech, it's really tough. And in most cases, you're going to have to find another partner at some point because they can't support what you're looking to do, unless you are literally just a plain vanilla prepaid or debit card or whatever it may be. But most fintechs today aren't. And there are a lot of banks that may do debit but won't do credit, don't want to do cross-border payments, don't like, obviously no one's working in crypto today, but when crypto was out there, there were a lot of banks that wouldn't touch it. We have banks that do online sports betting. We have banks that don't allow that. We have banks that will work with cannabis. There are banks that won't. Understand your product and your roadmap and your customer base. Some don't like non-SSNs. Some will accept that. Some may say they don't have to have an SSN, but they have to be living in the US. And some say they can be living anywhere. These are all things that we work with our programs when we work with them and our banks to make sure that those discussions are happening and that we have an agreement on everything that's going to happen with that program for the next 3 to 5 years, so that we don't end up having these quarrels along the way, because again, those quarrels lead to big fights and those big fights lead to divorces. And for a program, that means new cards and a new bank and new reserves and new pricing and new minimums. And for that bank, it means their balance sheet and the liquidity and their income being impacted and the regulators getting on top of them and whatever it may be. So it's not a good relationship on either side if it doesn't go well.
Right. And I would imagine a lot of time, energy, and money lost. So,
Absolutely, especially on
um,
both sides.
on both sides. Yeah. Well, very good. Well, before I let you go, Joyce, I do want to make sure that our audience knows how to maybe get in touch with you or learn more about the services that you provide.
Sure. So like I said, iLEX has been around for a long time. It's iLEX Consulting Group LLC. Our website is almost done. It is ilexgroup.io, and it's ILEX. And we do everything from A to Z. I mean, I don't even know where to start, but basically, if we're working with a fintech, we will come in usually after they get their first round of funding. We'll help them find the right partners. That's bank and processor, KYC, KYB, fraud, card, and bosses, networks, all of that good stuff. And then we stay with them and we help them build out their program, and we write their policies and procedures in partnership with them. We have all the templates that they need, so it's updating them, supporting that with the bank and making sure the bank is comfortable making those edits the bank requires, business rules around KYC, KYB, fraud, customer service, writing macros and scripts, and setting up Zendesk or tools like that for them to be able to track and monitor all of their customer service, helping them write, making sure that they have all the procedures and policies for customer services are also built out. We get them introduced to the networks. We help them on the incentive packages they may get. We help them with contract negotiations. We act as program manager with the processor and make sure they're getting them set up properly. We help them with testing and white card testing and then get them to launch. And then once they're launched, we have more and more been asked to stay on as their back office until they have enough money or the need to hire full-time people. So we've actually started a new division over the last couple of years. The last year is our post-launch group. And that's what they do. They do day-to-day KYC, day-to-day KYB, day-to-day fraud oversight. We have compliance, fractional compliance officers. We help maintain their policies and procedures. We stay as a liaison between them and the bank as needed. So we do all of that. On the bank side, we help banks bring them into the space. We have templates for them to give to their partners if they don't have their own. For policies and procedures, we help them build out board packages and risk assessments, and we give them templates for MSAs and letters of intent and due diligence questionnaires and all of that, and then usually bring them the first 2 or 3 clients so that we can make sure it's all working properly. And then we usually stay around as an advisor or to ask questions, but we don't really leave. We're kind of like a bad penny. Once we come, we're always around in some way, shape, or form to help, but we don't, it's not like we're charging for every hour. We don't do that. We don't charge like lawyers by the 15 minutes. We are there as partners to help. And so we have pre-launch and post-launch SOWs for our clients. We have full launch or full implementation for our banks. We have like I said, a team of 21. We're well versed in everything. We even have one person, and all she does is research. So she keeps track of all the privacy laws out there and all of the different requirements for MSA, for FBO models versus BAS models versus funds movement and just all those different pieces. And we make that all open and available to our fintechs and our banks. So, we come in and just become part of the team, and we stick around as long as people need us, and then we move on.
That's great. Yeah, you're an extension of their internal departments. That's
Absolutely.
wonderful. So the website's about ready.
It's out there. There's a couple of pages done, and the rest will be coming. But you can
All
see
right.
some of the things that we support already out there.
Wonderful. And I would assume your contact information is there.
Yes.
Okay, very
Yep.
good.
So you can find me on LinkedIn. You can find us on LinkedIn. iLEX has a page on LinkedIn as well. And all our addresses are our first name at ilexgroupllc.com.
Wonderful. Well, thank you so much, Joyce. This has been really just a pleasure speaking with
Thank
you.
you.
And I know that our audience has enjoyed this as well. And so just want to thank you for joining us today. And I want to thank everybody for watching. Bye, everyone.
Thanks for everybody.